Good morning, everyone. Welcome. We started a couple minutes late because some folks had registered for the event but did not were not able to get this Zoom link. So thank you all for being here. We've got a good program today with Cory Van Deusen from Lumsden McCormick and Christopher Earle from M&T Bank to talk about the SBA loan facts. There's a lot of confusion out there. So we pulled together 12 questions that we think will satisfy most of your concerns, but you have the ability to submit a question. And for the first time, we're going to do something we've enabled a feature called upvoting. So as a participant, if someone else has asked a question that is your question, just vote for that question and that will move the most popular questions to the top of the list. So let's get started. Welcome, Cory and Chris. Thank you for being here with us today.
Pleasure.
Great.
How's it going?
Great. Our first question, Kath. What's the difference between the Paycheck Protection Program and the Economic Injury Disaster Loan Program?
Good morning, this is Chris, and I'll take that one. There's several differences. The Economic Injury Disaster Loan Program is much like the disaster loans that a business would get were they to experience a weather disaster such as a hurricane or a tornado. The economic injury disaster loans are made directly by the SBA. You apply through the SBA's website, and these loans are up to $2 million, and they are able to be paid back for over a period of 10 years, and the interest rate on these loans would be 3.75%. The Paycheck Protection Program loan is something that was created just a couple of weeks ago as part of the CARES Act that was passed on March 27th by both houses of the Congress and signed by the President, and initiated last Friday by the Treasury Department and the U.S. Small Business Administration to provide relief to small businesses in the form of payroll subsidies and other expenses. The things that are very interesting about the PPP, for make it short, is that an awful lot of the loan, if not all of the loan, is able to be forgiven by the SBA if you meet certain criteria of the use of the loan proceeds. Now, the important thing to remember is that the Paycheck Protection Program loans, you apply directly to your bank. And it's important that you apply to the bank where you have a business account, because the bank has to comply with Bank Secrecy Act, Know Your Customer Act, and Anti-Money Laundering Acts when making these loans. And because of the remote way that we're all operating and keeping a social distance, we're not able to sit down with a customer and get all the various identification information that we need to initiate a loan for a prospective customer. So we are only able to do these loans practically with our existing customer base, because we already know who they are. And so it's important that you apply to your own bank. And these loans can be made up to $10 million, and they're the formula by which you determine how much you can borrow is to take your payroll expenses, which includes all compensation up to $100,000 per employee, and in addition to that, the benefits that you pay to the employees over the trailing 12 months from your last payroll. Come to a monthly average on that, multiply that, excuse me, I'm talking a lot lately, so I lose my voice in the course of the day. Take that monthly average and multiply it times 2.5, and that's the amount that you are able to borrow. So once you determine what you are able to borrow, you're able to use that money to pay payroll expenses for the 8-week period after which you receive the first disbursement on the loan, and to pay other expenses such as rent, mortgage interest, utilities, insurance premiums on group health, and so on. And at the end of the period, the covered period, which is June 30th, we will be able to calculate how much of that money is able to be forgiven. And the process for that is 8 weeks of payroll from the time you receive the first disbursement on the loan until June 30th. That can be 75% of the forgiveness, and the other 25% can be the other expenses that I talked about, such as utilities and rent and mortgage interest. If you have a balance left over on the loan after the forgiveness, then you are able to pay that back, that balance back, at a rate of 1% over a 24-month period, 6 months of which is a deferment with no payments, but interest does accrue, and then the balance is paid over an 18-month schedule.
Great.
I know that's a lot, but best as I can do it.
It's good. We'll move on to question number 2.
Can I jump in there for a minute?
So sorry, you bet. Go back. Yep.
This is Cory from Lumsden. Just a couple of ad-lib comments in helping clients. We probably have 50 to 60 applications. We're helping business clients prepare and advising on a lot of others where clients are preparing them themselves. A couple of pitfalls I've seen is, and this was mentioned earlier, is that the economic disaster loan you apply through the SBA website. And I want to pound this home to the audience, the PPP loan you apply to your bank, because I've had clients tell me that they applied for the PPP loan on the SBA website, and I told them that's impossible. 2 other things that I think that are out there that are confusing is one, there's definitely some questions on ownership. Ownership above and below 20% was a big issue and a lot of confusion on. Really, the underwriting is supposed to be only over 20%. We're not supposed to have to worry about 1% owners and things like that. 2, there was a thought out there for a while that if you had any foreign ownership, you were not eligible for the PPP. Since that guidance has come out, and it is very clear now that even if you have foreign ownership, you can apply for the PPP program, but it's only based on employment in the United States of residents or citizens in the U.S. that are earning wages for your company. So those are some of the things that I've seen in a practical nature that have come across and people have asked questions on.
Thank you so much for adding that. Those are really good points.
Yeah, I'm not shy. I'll jump in. Don't worry.
I'm glad, and I'll be sure to ask you. So question 2 is, can a business apply for both or just one of these programs?
They can apply for both.
There you go.
Just to add that, you can't use the funds.
Right.
Thing. You can't double dip on the funds. And I think there was an applicable date recently, like a couple days ago, where it was before that date, it was easier to apply for both. And on the back end, it's not as easy to apply for both.
Yeah, I think there's a question about timing coming up, so we can ask that.
And just a general statement to everyone out there, because I know clients are scared. Clients are nervous. They're trying to protect cash flow. And my recommendation, common sense recommendation to clients is, if you're eligible for the PPP, do the computation, get the app in process, and take a look at it, because it is forgivable. And as long as you keep payroll and full-time equivalents, and we can talk about that later, because that is part of it that goes into the forgiveness calc. As long as you keep it kind of consistent, most of the loan will be forgiven.
Thank you. That's great. That's great. Let's move on to question 3. What should an employer consider when deciding which loan to apply for? Cory, you
Well,
wanna?
yeah, Cory covered some of that, but go ahead.
Yep. So, which parameters fit their business the best? The max loan, which Chris went over earlier, is higher for the PPP. The economic disaster loan, the max loan is a little lower. The payback period for the disaster loan could be over 30 years, where if it turns into a non-forgivable loan on the PPP, it's only 3 years. But my gut reaction is, why not go after the forgivable loan unless you're not qualified for it for some reason? And I have seen some clients, or I had a client or two that made the decision that they weren't going to go after PPP because they didn't want to pay their people to sit at home and do nothing because they were already on unemployment and earning more on unemployment than if they were sitting at home doing nothing, earning their wage. So it's a business decision, just like you would look at, should I go to one bank or another CPA, one CPA or another? And there's different charts out there where you can examine the different loan attributes and figure out what's best for your business.
Excellent. On that, just a little comment from me. I think when you say, you said earlier that people should go to their bank to apply for the PPP, that's whatever they're doing, wherever they're doing their regular business banking, right? Is that what you're saying? Okay.
That's correct, yeah.
All right.
There is one, I think Wells Fargo has stopped taking applications because they met their quota because they got their hands slapped a couple of years ago.
Actually, Cory, I can update you on that. The
Cool.
Fed and the FDIC and the Office of the Comptroller of the Currency have relaxed the restrictions that they put on Wells Fargo as of yesterday morning, so that they can make more of the PPP loans.
That's awesome to hear.
Yeah, if you are a customer of Wells Fargo, go back to them, and they'll be able to take your application.
Great. So let's move on to the fourth question. And I think, Cory, this one is for you. What is the federal employee credit retention?
Yep. So this is a credit that was created under the CARES Act as well. And you can't do this credit and the PPP. It's a one or the other type deal. The employee retention credit is for employee payroll that you pay to individuals that you retain on payroll, and it is a credit that is refundable against your payroll tax returns on your 941. So if you have a $20,000 deposit and it required with your 941 and a $30,000 credit, you don't have to pay in that 20 grand, and you get a $10,000 refund by filing a refund form that just came out of Form 7200. And the tax credit is up to 50% of qualifying wages, a max of 10 grand for each employee, paid from March 12th, 2020 until January 1st of 2021. And you have to be a business that is impacted by coronavirus or COVID-19, however you want to refer to it. What does that mean? That means either one, and this is an either or, your employer, your business has been fully or partially suspended by government order due to COVID-19 during a calendar quarter, or you can show that your gross receipts during the quarter compared to last year's quarter are below 50%. I think probably a lot of businesses can show that they part or all of their business has been suspended by government order. And if not, if their revenue dips below 50% of a prior quarter, they can take advantage of this credit as well.
Excellent. Thank you so much. So the fifth question, we I think answered some of this, but I guess just the second part is I think applies still. We talked a little bit about who's eligible and how they should supply, but what are the banks going to be looking for?
The most important thing that the banks will be looking for are the payroll records. As I said, all banks are asking for the last 12 months of payroll from the last payroll that you made. So be that sometime in March or February or even as late as today. You supply the trailing 12 months of payroll. Then we are also looking for all of 2019's IRS tax forms for payroll. That's the 940, 941, and the 9 something else that we are looking for as documentation to the file. We also get into, as Cory said, the ownership of the business. We need to have the details on the ownership of the business, and that has to be 100% of the ownership of the business. Because when we submit to the SBA for the funding and registering the loan request, we have to supply 100% of the business ownership.
So, this is not on the slide here, but, one of the things we keep saying, everyone has to go to their bank. But there are, in communities of color and people who have credit issues, they are underbanked. So if someone doesn't have a formal business banking relationship, or and I don't know if this is true, if all banks can take these loans, or I know all of our members can, but I don't know if there are smaller banks that don't qualify, or credit unions or whatever. What does a small business do if they don't have a primary banking relationship?
First off, to answer your question about the smaller banks and so on, any federally regulated lender is being given the authority to make these loans. So that's not an issue. Also,
okay.
Credit is not an issue. We are not underwriting these loans insofar as credit availability and credit record. We are just going through the process of verifying the information that the customer provides insofar as what their payroll expenses have been in the past, and some verification insofar as the ownership and the identity of the owners. Insofar as customers who are, and we run into the situation of customers who are using their personal account to operate their business. And that's going to have to come down the road a little bit, because the volume of applications, I know in the case of M&T Bank, we processed over 26,000 applications between Monday and Tuesday of this week. In the course of a normal year, we process 8,500 loan applications, and we're processing 20 some odd thousand. We're up over 30,000 loan requests right now. So.
All right.
I want to jump in here. There is a local bank or two that are accepting new customers for clients that don't have a banking relationship. I've been asking the question, along with other business leaders that I know in the area, what about that sole proprietor,
right.
the little business that may not have a great banking relationship or one at all? Their applications are going to start today. So hopefully further guidance is going to come out on that. But there are business leaders around here, such as my buddy Jack Greco at Techstars, that are trying to develop tools for small businesses like this so they don't get left behind. And there's a lot more people that are talking about that too. And as for the documentation, know your bank. Each bank, I know there's a set request list that the SBA is asking for, but each bank's request list is different. There is no commonality right now between banks. Maybe 75% of it overlaps. And the other thing too is just stay patient, stay calm, do what you can. And I don't envy M&T or any other bank's position right now. Because I think you heard the volume that they were talking about there. They're hiring people, training people, and guidance is coming out every 5 minutes from the SBA that makes things seem like they're changing. And they are the ones that are between businesses and the money from the government. And they're kind of in a no-win situation right now because everybody looks at them as the plug in the bottle that's holding them back from their funds. And just communicate with your bank, make sure your application is complete, look at the request list, and stay patient where everyone is trying to get this done for the community, not just for each individual client. I think this is a community thing that we got to help everybody out with.
Great. So the next two questions we've already answered, but some folks have hopped on the call late. But let's try to make these like 1 or 2 word answers so that we've got a queue of 19 questions from the audience, and we're only halfway through these questions. So I want to make sure we get to those. So question 6 here: how much can I borrow? What can I use the loan for? Can some or all of the loan be forgiven for PPP?
So quickly, you can borrow up to $10 million on the PPP loan. You can use the funds for payroll and other payroll costs such as group health insurance, paid vacation, paid sick leave, so on. You can also use the loan for utility expenses, rent, and mortgage interest. Some or all of the loan can be forgiven depending upon using 75% of the amount for payroll between the time of the first disbursement of the loan and then 8 weeks up to and including June 30th, but not past that. So anything over and above that, 25% of it can be, of the forgiveness can be the utilities, the rent, the mortgage interest, and so forth. There may be a portion of the loan that remains at the end, and that portion gets paid over a 2-year period where there's 6 months of payment deferment with interest accruing at 1% and then 18 months of amortization at 1%.
Thank you. So question 7 is, do we apply directly to the SBA, and how much time do I have to apply?
You apply directly to your bank.
Great. That was a trick question, so you got it right.
You apply directly to your bank. You have enough time to apply before the $349 billion runs out. Right. And I was on a call yesterday that the SBA has been informed, not that they funded, but they've been informed of applications totaling $118 billion. So as of yesterday, approximately a third of the funds have been applied for already.
And just we know at the partnership that and you all probably know this, but there's another bill coming to actually add more money to that fund based on the initial reaction. It's under some debate right now, but Congress should take action one way or the other.
They're looking at $250 billion more, right? And right. The Democrats voted it down, but it's only because they weren't negotiated with, it sounds like, and they might vote again on Monday.
Yeah, so more to come on that. So question 8 is on the PPP loan, what's recommended in terms of reconciliation, in terms of best practices, and should a special account be used to track what the loan is used for? So this is a good question, Cory, for you in terms of, how people account for this money.
That's a great question. What are recommended terms of reconciliation and what are best practices? We're all flying by the seat of our pants because we've never done this before. We've done similar programs. I mean, you're getting into an FTE calc that's kind of like the Excelsior Jobs program and the Empire Zone calc and things like that. One of my specialties is business development incentives, so I've done a lot of these FTE calcs. But in terms of what you spend it on, make sure you keep track of where the money goes in terms of dollars spent, and then keeping documentation such as a payroll report or some sort of disbursement journal that shows that you actually paid the money. And I don't think you actually need a special account to track where the funds go, because it's not a dollar for dollar. Like, you get the dollar you get from the bank, you have to use for this payroll account. If you have the ability to use a separate account, by all means use it. It'll make it easier to track. You just have to prove that your expenses on the back end are equal to or greater than your max loan amount. And then you have to apply this FTE calc to get a ratio of your loan forgiveness. So just make sure you're tracking your expenses on the back end, which include your payroll costs, your rent, your loan payment, and things like utilities. So those are all in the payroll can be 75%, but other part can be 25%. So just pretend like you're going through an audit and you have to prove with source documentation what you spent the money on.
Excellent.
Yeah, if I can add something to that, don't panic if you're not able to have a special account to track this, because it's very difficult right now to open an account with a bank, because many banks are just having hours by appointment, if at all, or they're having you just come to a drive up because of social distancing. So as long as you keep good records and have the information in your business checking account, as Cory said, you should be fine.
So I'd like to, before we move on to question 9, just want to tell the audience here, we've got 23 questions in the queue. We probably won't get through them all, but if you have, it would be good to peruse the questions that are being asked right now and to like the ones that you want the answer to, because the questions that get the most likes are the ones that we'll ask first. So,
and can I email me? My contact information is out there. Call me. My business phone's going directly to my cell phone. I am glad to help the community out here with questions and things like that. I was on the phone with a small business in Alfred, New York the other day. I don't even know how they got my number, and they were asking me questions about PPP. So this is, in my opinion, this is good for the community and a community effort. Feel free to reach out to me afterwards.
We are going to set up over the next few weeks for our members sort of an hour with an expert where it's just a Q&A session to try to help people get their individual questions answered, because there are so many questions. But again, some of this is we're all waiting for the guidance on, so it's it's not like they're missing something. We're all, as you said, flying by the seat of our pants. So let's move on to question 9. It's about the EIDL, the disaster loan program, and who's eligible and how do you go about applying for that, and how much can be borrowed.
Go ahead. Who's eligible for it? Any business that is impacted by the COVID-19, and originally it was like county by county, but now all of New York State is impacted in a disaster area. I'm pretty sure pretty much the whole entire United States is. How do you apply? The SBA website, that's really the only way to apply. If you Google EIDL SBA, you'll go right there. It's pretty intuitive. There's a lot of information you have to upload. So look at the request list and how much can be borrowed. The max loan is $2 million that you can borrow.
Right.
Yeah, if I can add something,
Sure.
Just got an advice that the SBA has said that they are doing the economic injury loan advances within the next probably today. The advance is something that they give you to try to keep you going until the full amount is dispersed, and that's calculated at $1,000 per employee up to a maximum of $10,000. So those advances should be credited to the accounts that were identified in the application as of today, Monday at the latest.
Yeah, and we have a question actually about that. So let's stick with the EIDL loan for a moment. So what can that loan be used for? And I know you said earlier you can't double dip if you're going for the PPP. And how much time do people have to apply? So, and I don't know if there's any guidance here if people are applying for both about what's smarter to put on which programs. So in terms of expenses. So who wants to take this one? Cory, is this you?
Yep. So the economic disaster loan is a little more liberal in what you can use it for. It actually can be used for working capital. So we're just keeping your business there and buying inventory or replacing inventory that went bad because you weren't able to use it. So if you want to try and go after both, you're going to use your PPP for payroll related costs, and then the EIDL for working capital and other things that aren't covered under the PPP, since the EIDL covers more expenses than just payroll.
Great. Thank you. Question number 11, and we only have 12 questions total before we get to the audience questions. So Cory, help us understand how an employer accesses the emergency grant through the program. I think this is
you go right to the SBA website and you apply for the EIDL and specifically the $10,000 grant. And I actually have a client that's already received their 10 grand. So it seems like they're trying to get those funds out there pretty quickly.
That's great. The last prepared question is, what are the tax implications of both the EIDL loan and the PPP loan?
So the EIDL loan is a regular loan. You get a deduction for any interest payments on it and no deduction for any principal payments. And then for the PPP, if it is forgiven, the federal government has already said that that forgiveness is not included in gross income, so it is non-taxable. Generally speaking, unless you're insolvent, loan forgiveness is usually a taxable event. So the federal government has said this is non-taxable. And then if anything that turns into a loan, again, interest is deductible, principal payments are not.
Thank you, guys. Great. So let's get to the audience questions. And the clear vote winner was Lisa Colton's question. I've already applied for a loan with M&T Bank and received an automatic reply on Tuesday of this week that the app has been received and reviewed. Realistically, when should I hear, and will I have a good chance of receiving something? So she says she's a single person and not asking for a lot. Is my branch making this decision, or is it being made at a higher level?
The branch is not making the decision. It's all being done centrally. I would expect that they see something in the way of an approval within the next couple of business days and hopefully disbursement shortly thereafter. We didn't receive guidance from the SBA on a note to use until yesterday. So the information that we're getting from the agency, and it's not just the SBA, but also the Treasury, is coming out in fits and starts and being eked out to us a little bit at a time. And so we're doing the best we can. And I would hope that we've got money into the hands of the initial applicants by the end of next week, beginning of the following.
Thank you. So if we have people that have been furloughed, oh, sorry, I just lost my question here, because no work exists for them at present, should we be putting them back on the payroll with no work or leaving them on unemployment? We do expect to have work available prior to June 30th, and furlough should end.
So I'm gonna guess we're talking about PPP here.
I assume so too. Yeah.
Yep. So if you want 100% loan forgiveness, which is I'm guessing that's what they're kind of looking for based on the question. You have to first establish what's your max loan amount, and that's on the front end based on historical payroll data, and you get a dollar amount. Then once you receive your loan proceeds, that starts an 8-week measurement period, and you add up all your qualified expenses such as payroll costs, rent, debt payments, and utilities. And if that is equal to or greater than the max loan amount, then you may receive 100% loan forgiveness. Now what you have to do is you have to look at your FTEs, or your full-time equivalents. Full-time equivalents are based on a 30-hour work week for your qualified period, which starts with your loan and lasts an 8-week period, and that's compared to some historical FTEs. And if your current FTEs are higher than your historical FTEs, you get 100% forgiven. If it's at a 90% level, 90% gets forgiven. And a lot of the details on this, there's guidance still to come. But stuff is starting to roll out, so we don't have 100% of the answers on the loan forgiveness part, but if you bring people back, you will get some loan forgiveness.
So just a little commercial interruption here. We've got 36 questions. So if you've recently submitted a question, my advice would be to go and sort of scan these questions and vote for the one that looks closest to yours so that you can get the answer that you want, because we won't have time to get to all of these questions. So Patrick asks, with regard to forgiveness, can you give temporary raises during the 8-week period as long as you don't exceed the 100K pro rata for that period in order to increase the amount that can be forgiven?
Sounds theoretically possible, but where the guidance comes out, I can't answer that detailed of a question. But you don't have to get to 100% forgiveness with the payroll. You just have to get to 75%, and then hopefully the whole is filled by the other qualified expenses.
You know, I don't know if you guys are the right people to comment on this, but, you know, we're talking to a lot of our members that have challenges with staff who actually could make more money with the enhanced unemployment and trying to hang on to their staff. So I think this is partially, I don't know, Patrick, if that was your intention, but this notion of being able to increase payroll to keep people working as opposed to having to churn that staff out. So, you know, it's a really good question in the environment that we're in right now.
I had one client that decided not to go after PPP because of that situation. Their employees were making more money on unemployment, and then for the people that were actually retained, because there is some business operations going on, we're going to take the employer retention credit on the payroll tax return, and then also possibly defer the payment of payroll taxes until December 31st of 2021 and 2022.
Yeah, I mean, I think what the folks that we're talking to are people who need those workers to be at work, right? So, you know, they're, you know, and there are quite a few employers that are looking to hire right now, you know, and so it's become challenging for them because of that, in that sweet spot of those wages to keep people working.
You're also allowed to give a tax-free payment to your workers to help them buy food and groceries, which is non-taxable under the COVID relief. I've had some clients do that, just give a gift to their employees as well.
Yeah. Also, Donnie, if I can add one other thing, as you go through this process and we get to June 30th, if you determine that there's a certain amount of this that is not going to be forgiven, and you still have those funds and haven't expended them, you can pay them back and have no penalty whatsoever and not be paying any interest. So it's, you know, better to apply for the amount and see where we go between now and June 30th before you decide not to participate at all.
I agree.
Oh, that's great. That's great. That's great advice. So what's the turnaround time for a decision approval? The person's asking for M&T, but really I imagine the bank's turnaround time is going to be all, you know, fairly consistent. So once the applicant applies, what's the turnaround time for a decision?
We try to give an answer insofar as completeness of the application within 24 hours of submission. Then we go through and do what we have to do on the due diligence side, verifying the information that was provided to us. And by the way, if in the first instance, 24 hours elapses, you find out there is something missing, you'll get an email from us to the email address that was put on the application form saying, these are the items that we're missing. Please reply to the email by uploading them and so on.
So Chris, does that put someone at the back of the line again if they're missing information?
No, it does not. No,
Okay.
it does not. Those folks would then go, you know, right to due diligence. Once we get all the information we need, they go to due diligence and then processing. And you know, as I said earlier, we now have a note that we're using. We're awaiting an SBA loan authorization form, but you know, soon thereafter. We would be able to issue an approval. It's important that everyone know that you're going to be required to take these funds as, or at least have the first disbursement of these funds within 10 days of approval. And once that disbursement happens, that's when the 8-week clock starts ticking. So, you know, if you get disbursement of the loan proceeds on, say, April 20th or 24th, you know, there's not 8 weeks between April 24th and June 30th. So,
you think there's any chance they'll extend past that June date? I know we're spitballing here, but
I can't speculate on that. I don't know if Cory has a thought or not.
I've heard people say that might be a possibility, but I haven't seen anything concrete, just theoretical in nature.
At some point, if they pass this additional money, if people can't, you know, don't get it fast enough, then, you know, it's not going to be as valuable, obviously. So, all right. So with respect to the PPP, this is a 3-parter here. What's the time period that's used for counting the payroll number and the head count that applies for the beginning of the loan? Is it the average of 2019's numbers? Is it the day the loan executes? Is it a snapshot of February 15, 2020, or some other means? This is probably getting to the retention number and the 500 number, right? So, so what serves as the, you know, the bench, the sort of starting number?
So my understanding is that the base period is historical for the last 12 months. Some people have been using all calendar 2019. If there is no operating history in 2019, meaning the business didn't have employees and didn't exist, the base period then goes to the first 2 months of 2020. The measurement period for FTEs, I haven't seen anything real definitive on that, but the best thing I've seen out there, if you Google Nutter Uncommon Law, they have a really detailed instructions on how to compute the loan forgiveness and the FTEs. I don't know whether this is accurate, but before, and it seems pretty detailed. And they're saying that the base period is the lower of February 15th, and this is for FTEs, February 15th, 2019 through June 30th, 2019, or from January 1st, 2020 to February 29th, 2020. So the SBA is supposed, and I think this is C, the SBA is supposed to issue guidance on this stuff within a week or two.
Okay, great. Do you have anything to add to that?
No.
Okay, terrific. All right, so how does the forgiveness of the loan work? I'm assuming, I don't know which
well, yeah,
loan they're talking about. But
there's no forgiveness on the EIDL, so let's talk about the forgiveness on the PPP loan. The forgiveness will be determined shortly after June 30th, 2020. And the lender will apply to the SBA for forgiveness based on 75% of the loan being forgiven, up at least 75% of the loan being forgiven by the payroll that you paid from the date of the first disbursement of the loan 8 weeks forward, but not to exceed June 30th. So if you have first disbursement on the loan on May 30th, you're not going to have 8 weeks to pay payroll. So they'll take that amount, and included in that will be things like benefits, group insurance benefits, and also sick time or vacation time. That accounts for 75%, and then 25% can be the things that we've delineated earlier: utilities, rent, mortgage interest, and so on. And that's the amount that we will submit for forgiveness and receive notice as to whether or not and what's disqualified. Whatever is forgiven will be forgiven, and whatever is disqualified will need to be paid back.
So I know you've answered this question already, but once you apply for the PPP, how long does it take for the funds to arrive?
We hope not more than about 10 business days.
All right.
Could I make a common sense comment on
Please.
this? Because I'm starting to get tons and tons of questions from clients about how the loan forgiveness works, and there's not a definitive answer to that yet because we don't have guidance. But generally speaking, if you back up and take a 30,000 foot view, and if your payroll and your hours worked are similar during your period from the time you get the loan proceeds to either 60 days after that or June 30th, whatever comes first. If your payroll amounts and your full-time equivalents, hours worked, are pretty similar to your historic stuff, you're gonna get a lot of the loan forgiven. And even if you miss it by 5 or 10%, then it's pro rata. So it's not all or nothing. So just do what you can. We may not have final answers before you get the loan proceeds, and make sure you're kind of similar to your historical data, and you're going to get something, and it's going to be forgiven, not taxable, and a good thing for everybody in keeping people employed.
Thank you for that. So these are some interesting questions coming up. What happens if I have employees out on maternity leave during the 8-week time frame? My employees are currently collecting unemployment. Does this have any impact on the PPP?
Well, the fact is, they can pay that employee because medical leave is included.
Say that one more time.
They can pay that employee during the 8-week period because vacation paid, medical leave, and so on is included in the calculation of what is a payroll expense. Now, if they choose not to pay that employee and let the employee continue to collect unemployment, then that amount that they use for something else may not be included in the forgiveness.
Great, that's helpful. How can these loans help an independent contractor who works on commission only?
An independent contractor can take the 1099 income that they receive over the same periods that we talked about, the time of their last pay, going back a trailing 12 months, and then also everything that they received for 2019. And they are able to apply today to some institutions. In the case of M&T Bank, we're wanting to get some final guidance from the SBA. So we're not taking independent contractor or proprietorship loan applications until Monday. But they are able to take that information, average it out over 12 months, multiply the monthly average by 2.5 times, and apply for that amount of money.
There's a question. It's is this video being recorded for future watching? Yes, and everyone who is participating in the thank you email will get a link to the recording of this session. So, can PPP be used for new hires?
There's no employee tracing, so yes, it can be.
Okay, what happens if I do not use the funds for payroll and the 25% other limited items during the 8 weeks following the origination of the loan? Can I use that for other reasons as long as it is paid back?
Yes.
Okay. Can you use the PPP loan to pay back salary, rent, utility, etc.? Will that not be forgiven because it's outside the 8-week period?
If it is outside the 8-week period, it will not be forgiven. That's correct.
And the 8 weeks, defined is 8 weeks is it up to 8 weeks, or is it 8 weeks from the loan date as long as it's through June? So what's the 8 weeks?
It's 8 weeks from the first disbursement, but not to exceed June 30th.
Okay. Our normal work week is 40 hours each employee. In the past, we had employees that may have averaged less than 32 hours. If we pay them 40 hours, will that be calculated for forgiveness, or is there any pro rata clause saying we have to continue wages as an average?
I don't think so. Cory, what do you think on that?
I don't think so, but yeah, until the guidance comes out, I think it's just looking at payroll dollars and then number of hours.
Right.
Okay. So if the same person says, we have an employee who's not reported for 2 weeks, if they're let go, will it impact their retention calculation?
Yes, if they're not replaced, then they were employed during 2019 to attribute to the base period.
You mentioned that to qualify for the federal employee retention credit, a business must show that they were impacted by COVID-19. Will the forgiveness of the PPP also have an obligation to the borrowers to prove they were impacted by the PPP?
I haven't seen definitive guidance on this question.
I'm assuming that this means, I mean, some businesses are actually, are more in demand now, right? So I guess that's
well, my common sense answer to this is, if you're worried about cash flow, and your management team has talked about cash flow, do you need to lay off? When do you need to lay off? Are you going to lay off? That kind of stuff, to me, that's being impacted by this. But there is no official guidance on what is defined as being impacted by COVID-19.
Are employee benefits like life insurance, hang on a second, Mike, short and long-term disability insurance eligible PPP reimbursable costs?
I don't know about life insurance. I believe the disability is.
Employment is.
All righty.
State employment, I know that is. I haven't looked up the other ones.
Can we get a copy of the applications PDF before heading to the website? I'm trying to be 100% prepared for all the questions that are going to be asked.
Yeah, you can. If you go to the SBA or the Treasury website, you can get a copy of their application. However, most institutions have put together their own application form. And I can tell you that the M&T Bank one is so user-friendly. It's really terrific. And it's actually easier than just doing the government form first. So I encourage you to contact your bank, because there are all kinds of online instructions, and everything is done on. So it's important that you have the documentation that we've talked about in a downloadable form or format, so that you can download it when requested by the program for your lending institution. But very often these application packages are very user-friendly and give you time and all the information you need.
Chris, there's one person says they received an email from M&T about missing information, but there was no link to be able to upload the files. How do they go about adding that additional information to their application?
Reply to the email.
Reply to the email. Excellent.
One trip up I've seen in applications is some banks are requiring name, address, social security number, and date of birth of every single owner of the company. And the person filling out the application may or may not have that information. So if you can get that information on the front end, that's good. And I will say that M&T's application is pretty efficient in most respects. My wife filled one out for a startup company in about 10 minutes yesterday.
Wow.
Great.
So our last,
Cory's right about have that social security number and date of birth information on every owner, because as I said earlier in the webinar, the SBA E-Tran system, which is how we tell the SBA that we're making this guaranteed loan to this customer, requires us to have that. And so it's important that you gather that information in advance before you apply. So that's a good get.
Our last question, and last question we have time for, is when applying for the EIDL for working capital, how far out in the budgeting cash flow can you go? 3, 6, 12 months?
I don't know yet.
Yeah, me neither. I'm sorry.
Yeah, I've been focusing on PPP more than EIDL. I apologize.
Yeah, and that's a question that you can send there's a EIDL questions page that you can send that to. When you go into the SBA website, you'll be able to find that questions page, and you'll be able to submit that question directly to the agency, and they'll respond to it.
Yeah, the SBA's website is actually fairly comprehensive
It
with
is.
information. Well, Chris and Cory, thank you so much for your time today and for answering. We got through most of the big questions that were voted on, so appreciate that very, very much. This is evolving, and we will strive to keep all of you get your questions answered so we can get back to economic recovery as quickly as possible. Reminder, this session will be recorded, and it has been recorded and will be available to anyone who needs to listen to it again. So thank you so much, folks. We appreciate it, and have a great day.
Bye-bye.
Thank you.
Thank you.